Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, the bulls just continue their advance forward and pretty much leaving the bears scratching their heads as to when this market is actually going to pull back. Now, today's market activity was very good, guys. Very broad market activity yesterday and today as well, which is a very stark contrast in relation to the amount of breadth that we were getting last week. That was one of the main criticisms that I was giving on the channel, that the market wasn't very broad, and that if ever we had a little bit of QQQ weakness, it definitely had to be counterbalanced by XLF and XLV, and so far the rotation is playing out very well for the bulls. So in today's video, guys, we're going to take a look at a few things together. Not that long of a video today. Going to take a look at our major technical analysis rundown on our major market indexes, then take a look at our big tech names, see if we can find any deals out there in the market for big tech, and lastly, take a very quick glimpse into my portfolio for a few of the trades that I wrapped up today before tomorrow's holiday market event. So without further ado, guys, let's get right into today's video. SPY up a very healthy 0.25%. QQQ ending the day largely flat, but making up for the flatness in QQQ were financials and healthcare really doing a great job of holding it up, and semiconductors just continue their outperformance. Take a look at the heat map here, guys. You can see most of your big tech names, except of course for NVIDIA, most of your big tech names, guys, were indeed pulling back on the day, but we did have a very broad bottom half of the market to really make up for those losses in our major tech names. Healthcare, fairly decent day. Most of your names were up. Financials as well, very decent day of recovery, not only for the banks, but also for some of the credit card issuers that I've been watching on the channel now for about a week. Visa and MasterCard, very good there. And just the bottom half of the market, guys, really portraying a healthy market overall. When big tech pulls back, the rest of the market is there to backstop, and that is exactly what we're looking for. Now, obviously, guys, we cannot keep up these daily overbought conditions forever. Eventually, we will get a little bit of a pullback, but same logic applies. When the pullback does come, I really hope that the pullback largely comes from your big tech names, which have been in relatively overbought conditions as of late, and the rest of the market is there to recover because the rest of the market has not been running as much as big tech has. Now, take a look at the one-day relative, guys. You can see that expressed even better. Most of your market was up today. Consumer cyclical and communication services down on the day. On the 1 week relative, guys, you can see just how much technology is outperforming everything else by a landslide pretty much. Technology, real estate, industrials, financials in the green, but a lot of the market still in the red. And take a look at your 1 month relative, guys. Technology, virtually for all intents and purposes, right? You can include communication services, but communication services is led by Google and Meta, right? So kind of unfair there. So mostly only technology gains to the upside, and the rest of the market not really participating. So that's why I say, guys, that if big tech chooses to pull back from this 1 month's worth of gains, we do have a lot of wiggle room for the bottom half of the market to really rally and recover behind that. Now, big tech has such a large weight in the market that I would not be surprised that even though they would drop and the rest of the market would be relatively healthy, that would cause an ever so slight drop in the S&P 500. But at least I don't think it's going to be a waterfall drop. That would only be the case, guys, if everything is dropping at the same time. So we'll keep our eyes peeled. Obviously, guys, we're going to take this one day at a time, but the most important thing always that I want to teach you guys, watch the relationship between QQQ, XLF, and XLV, your three major components of the market. Now, when one of them goes red, you need to see the other two participating. If all three are red in any given market, guys, for days and days on end, it means that it's a fear-driven sell-off, and it's synonymous with money exiting the market with unhealthy rotation, right? As long as you can see healthy rotation, the markets are still doing very good, and it's been a very long time, guys, since we've had waterfall drops on all three of our major indexes at the same time. So keep your eyes peeled for that in the event it does come eventually. So let's get right into some technical analysis, guys, shall we? So in terms of our daily market rundown, well, very nice, healthy daily uptrend by the SPY right now. Daily higher lows right here, 540, let's call it. So as soon as this move is topped out from our overbought conditions, we're going to be looking for a little bit of a daily pullback. Anything pretty much above 540 is just going to be looking for a daily higher low for the further trend continuation. In the event that the bears do engulf this move and set up for maybe a little bit of a further daily downtrend consolidation, we have tons of space on the weekly, guys. Look at this gorgeous weekly uptrend move. Anything pretty much above 517.50, just going to be looking for a weekly higher low for that further weekly trend continuation. And there's so much beautiful support here at our prior all-time highs. I do believe it's going to be very tough for the bears to get clean through this area, which is why the most probabilistic scenario, in my opinion, is just looking for a higher low for that trend continuation. Everything looking very healthy so far, and the monthly is just completely gorgeous as well. Moving on to QQQ right now, same analysis as the SPY, right? So very nice daily uptrend. QQQ has a lot more space than the SPY because no daily higher low set up here. This is one daily move. So the daily higher low is all the way down here at about 462, let's call it, right? So as soon as this move is topped out, and in my opinion, we are getting kind of close, guys. An RSI level of 81.59. I put the line there. You can see even back here last June, we did not hit 82 on the RSI. The last time we hit 82 on the RSI is August of 2020. And you can see we did get a fairly hefty pullback when that did occur in that 2020 period, right? You can see very, very sharp drop here by about 10%. Really not expecting that in these market conditions. But just to say, guys, we could be expecting a little bit of a pullback, right? If we look at most recent history where we have got, you know, in the mid 70s, high 70s locations, such as back here, you can see that usually these little sell-off events do wonders to cool off the RSI, and then pretty much we can embark on legs higher. You see it here as well, right? Very overbought conditions. Cool off the overbought conditions for about a week, and then we are just moving on to the continuation of the daily uptrend. So all in all, guys, looking very healthy on QQQ despite our overbought conditions, and tons of space for the fallback. Anything, as I said, above 461, looking for that daily higher low for the trend continuation. Maybe target the 12 EMA as your first touch. Now, in the event the bears set up for the daily downtrend for a little bit extended consolidation, well, we do have tons of space on the weekly, guys. Anything above 444, let's call it. Just gonna be looking for that weekly higher low for the eventual trend continuation, and so much beautiful, nice support, which was previous all-time high resistance. So it's going to be very, very tough for the bears to really get through this in one clean shot. Not really expecting that as of now. And the monthly, guys, the monthly is just absolutely gorgeous to say. Still about a week and a half of monthly trading left. So we will see, obviously, how this month closes. But usually in, in election years, the summer does tend to be quite good. Where the markets tend to have a little bit of weakness is right before the election. But usually June and July should be pretty decent for these markets. All right, so taking a look at healthcare, guys. Healthcare is having a very, very nice recovery, right? So we were in the context of a daily downtrend, nice engulfing move in relation to our most recent leg of selling, and now the bulls have engulfed 100%, coming off of our lows, guys. These lows were pretty dangerous because if we were to lose those, well, we would just perpetuate this weekly downtrend, coming into our lower lines of defense right here around the 40, and those are the levels you do not want to lose, 39.59, the monthly higher lows, because then we would be in a monthly downtrend. Now, obviously, there's a lot of trading left, but that was the general premise of the idea why we wanted to defend these levels so badly, right? By the bulls. The bulls actually coming back, playing defense when the market needed it the most, when your big tech names are pulling back. Financials finally starting to come alive. So financials are set up to do one of two things, either continue this V-shape engulfing move, reset into a daily uptrend, or if ever we top out here, well, the bulls do have enough space here, guys. Anything above 40.36, going to be looking to reset the daily uptrend higher, put an end to this weekly consolidation that we've been under, and maybe even start looking to recapture this weekly uptrend eventually. So all in all, not looking too bad on financials, still a decent amount of work for the bulls yet, but all in all, looking quite decent. Moving on to healthcare right now. So healthcare also looking quite good. Healthcare was never in jeopardy of losing much, right? Big engulfing move, looking for the daily higher low for the daily trend continuation. So reacting very nicely in the last couple of days of trading from our lower area of support, prior support back here, current support as well. We do have a lot of moving averages to contend with as well. So decent little location for the retest and maybe eventual run, which would be obviously a break of 147. Now, on the flip side, if healthcare does choose to consolidate a little bit further into a daily downtrend, on the weekly, we do have a lot of space here, guys. Anything above 140.69, looking for the weekly higher low for the potential trend continuation, right? Nice weekly uptrend, just struggling a little bit with these tops in the last 1 month of trading. But all in all, I don't see any immediate red flags on healthcare to speak of. Moving on to semiconductors right now. So semiconductors looking pretty good, guys, but even semiconductors, guys, I know they're super strong, but we are currently hitting RSI levels that we don't hit very often. Take a look here. We hit this once back here in January, and you can see what happened. We were graced with a little bit of a pullback before moving on to new all-time highs. So I'm not necessarily waiting for this, but maybe just a little bit of daily consolidation to the downside could be good for these markets, right? Anytime we start hitting these really high 70s, $80 levels, you can see sideways consolidation, right? This may be the best thing that can happen to semiconductors right now. Maybe we just get a little bit of sideways action consolidation, which is going to do wonders in cooling down our longer term timeframes as well, right? The last time we truly got this overbought, you would have to go back to pretty much 2021, the peak of the last bull cycle, guys. And what happened is we really stayed range bound for about, 2 months worth of time, a very, very healthy scenario. Obviously, what happened thereafter, the entire market fell apart because of rising inflation and obviously geopolitical concerns between Russia and Ukraine, right? No secret there. The entire market really took a bath, not only semiconductors. This time, the market is largely different. We're not dealing with the same catalysts at all, which is why even if we do get some sideways consolidation for a little bit of time, I do believe it's going to be a very healthy thing before resuming into a further uptrend. That being said, for some immediate price action, a lot of space between us and our most recent higher low at 250. So any move lower, we're going to be looking for the higher low for the trend continuation. If for ever which reason, guys, we fail and set the daily downtrend, well, there's so much space on the weekly. Look at this weekly chart, guys. Anything above 198.67, looking for the weekly higher low for the further trend continuation. And even if we consolidate sideways here for a considerable amount of time, same logic applies, guys. Just going to allow us to cool down a lot of these overbought indicators. So not a bad thing if we do consolidate sideways in semiconductors, as a lot of them are pushing all-time highs, right? A lot of them, guys. I mean, NVIDIA is one, right? NVIDIA continuously pushing to new all-time highs. AVGO continuously pushing to new all-time highs. Applied Materials, right? Another one continuously pushing to all-time highs. Micron, another one continuously pushing. The list just simply goes on, guys. You want me to do some more, right? So NXPI almost at the all-time highs right now. Texas Instruments, I haven't looked at them in a while, but I wouldn't be surprised if they are at the all-time highs, right? Relatively close to the all-time highs. Qualcomm, another one, blasting past the all-time highs. So you guys pretty much get the drill right now, right? Could be a nice opportunity for some sideways consolidation. I'm not expecting the floor to come out of the market. Now, moving on to the IWM. So IWM not looking too bad, even though they are still trapped in this daily downtrend momentum. So now what are the bears looking to do? Set up for the lower high into lower low. Moving averages are going to act as resistance. And we are still just hunting for this weekly higher low for the potential weekly trend continuation, bringing us into the 212 area. That is very big prior resistance, which is what stopped us out back here, right? So still hunting for the weekly higher lows, guys, but in the event the bears take back too much of this move, could just be more sideways action for the Russell. In my opinion, this one will really not explode to the upside until we get closer and closer to that first interest rate cut in the markets, right? Growth stocks respond best to changes in interest rates. So that's really what I'm expecting for the Russell to really start gaining the levels to the upside. As of now, just very, very muted. If we do start revisiting some of these lower levels, could be a little bit of a time to start bidding some trades in this location here for that eventual upside, maybe in the second half of 2024. Now, lastly, the Dow Jones. Dow Jones, I mean, struggling still, right? Only 0.15% of the upside, and the price action here looks a little bit messy. So I'll remind you, what are we trying to do? Daily downtrend. The bulls are looking to engulf this move as best as they can, reset into a daily uptrend. So far, the size of the bounce is nice and reacting from our level of consolidation, which is prior support right here, 35.6 down to about 38.6 down to about 38.300, right? So looking not too bad, but the bulls do still have a little bit of work to do before being out of the woods, even still in a bit of weekly consolidation right now too, right? So what are the bulls looking to do right now? Desperately trying to set the weekly higher lows for that weekly trend continuation, bottoming out nicely in the last 4 weeks of trade. But guys, if we lose these levels, 38,000, it will be a weekly downtrend. And at that point, you really have to be careful, guys, because the monthly higher lows are there too. 37.7, lose that, you lose the monthly downtrend. So far, that is not here yet. A lot of trading to be had before that event might occur, but just in preparation of what it does. Right now, though, the bulls aren't looking too bad. I will still give them the benefit of the doubt, but I will need to see a break of 39,000, guys, to really get us underway into this new daily uptrend and really start getting some legs onto this weekly move higher. Now let's take a look at crypto, because crypto, we haven't looked at it in a little bit of time. Now, Bitcoin in the context of a daily downtrend right now. So the bears are in full control of the short-term timeframes into the weekly. So since we're in a daily downtrend, we're looking on the weekly. What are we looking for on the weekly? Looking for the weekly higher low, anything pretty much above 56.375. Going to be looking for that weekly higher low for the weekly trend change. This is going to be a big week for the bulls here, guys. Why? We're defending the weekly 12 EMA. We really haven't lost it that much, right? A couple times back here, briefly tapped into it here. Now, look at these weekly candle closes. Not many candles have closed below the 12 EMA since the rally started here last November from 28,000. So this is going to be a big one to watch, guys. If we break this for any which reason, the bull and the bears take back too much, could just be in for even more sideways consolidation. Do not forget, Bitcoin is a risk on asset, and usually risk on assets cannot hit their full potential until we get some better macro environments, more specifically, until we get some interest rate cuts and institutional money starts pivoting from value names, defensive names into more risk on names, right? So still sideways consolidation for Bitcoin. Moving on to Ethereum right now. Ethereum, same logic as well, right? Daily downtrend underway right now. A little bit of sideways consolidation at the bottom. So what is Ethereum looking to do on this daily consolidation? We're looking to set the weekly higher lows. So big weekly downtrend back here. ETF news, engulfing move, 100% engulfing move, right? Now looking for the weekly higher low for the weekly trend continuation. So the bulls do have a decent amount of space. And in terms of the fibs, guys, we really haven't pulled back that much from the all-time highs, or from these most recent highs, excuse me, only about 50%. So the bulls do still have a chance at resuming the rally. However, if for ever it's reason, guys, we fail and move into further weekly consolidation, weekly downtrend, going to be once again looking for monthly healthy consolidation, in my opinion. Ethereum, same logic as Bitcoin, guys. It is a risk on asset. So before you can see this really start to explode, and I know it's come out up a lot this year. I'm actually so impressed of how much crypto has moved while interest rates are at all-time highs. But in my opinion, we really can't start getting some real continuation and really big legs in this crypto market until interest rates really start coming down and the risk on trade becomes more prevalent. This is pretty much the exact same trade, guys, as the Russell, right? The Russell has come up a lot since the bottoms of last November, but still is unable to really get the legs that it wants to really start coming to the all-time highs. Now, let's move into our big tech names, shall we? So moving on to Apple right now. Apple not looking too bad, although it is pulling back 1.10%. Very nice consolidation for Apple right now. So daily uptrend is underway. If for ever it's reason we fail the all-time highs and break below 211.25, daily downtrend will be started. And at that point, guys, you'll be looking for a beautiful weekly pullback after about 10 weeks worth of rally. Could just be time for a little bit of weekly pullback. Keep in mind, guys, right? The daily is still looking relatively healthy, but Apple right now really does need a pullback. Now, in terms of a pullback here, guys, I'm not really expecting us to retest the all-time high. That would be the best case scenario, but it's a little bit far away for Apple right now. That would be a drop of between 7.5% to about 10%. And usually Apple doesn't drop 7.5% to 10% unless it's getting, a lot of bearish catalysts in a row like it was getting back here, or unless the overall market has a little bit of a pullback like it did last fall. So that could be the only time that you maybe see Apple pull back to the all-time highs. What I'm maybe expecting, guys, is a smooth downtrend into maybe 205, 202. That is something that may be a little bit more manageable, and that's where I'm going to be looking to be making some short put plays on Apple. But all in all, full control. The bulls control everything, the monthly, the weekly, and the daily. Still no red flags in sight. Moving on to AMD right now. So AMD continuing its slide to the downside, 2.38%. This one can just not catch a break, guys. It seems as though every day NVIDIA and the rest of the markets are up in semiconductors, and AMD and Intel are down. Take a look. That's on the 1 day. Take a look on the 1 week, right? AMD, Intel down. And take a look at the 1 month, guys. AMD and Intel down. Seems to be the only couple of names in the entire semiconductor index, right? Other than maybe ON Semiconductor that are just down. Now, AMD and Intel, obviously it's because of the China news, right? So China has put bans both on the government level for some employee devices for government workers, and also at a more private sector business level, enterprise level, they've banned a lot of AMD and Intel chips from the market. That impacts Intel more heavily because 30% of Intel's revenue is from the Chinese market, whereas AMD, only about 8 to 10% of their revenue is from there. So AMD will have a better time of managing that, especially considering the fact that their data center business, arguably their largest line of revenue that's coming, is going to be online this quarter and the next quarter as well. So looking to get some good gains from that. That being said, short-term price action, guys, clear daily downtrend right now. So what are we looking for here? Eventually, we will need to see an hourly trend change. So far, no hourly trend in the last couple of days. Need to see that hourly trend change to the bulls. They just can't get it done, guys. Keep losing it, right? Big move up, recapture. Nice move up, recapture. AMD's been having the same price action for the last couple of days running. So eventually, when we do get that little bit of a daily rally up higher, we need to get as close as possible to 162.55. Get me as close as possible to there, and we have the best chance of resetting this into a daily uptrend and really putting a stop to this weekly consolidation, right? It's been a very nice weekly upswing for the markets right now, but coming a little bit close right now, in my humble opinion here, guys, right? We will be looking for a higher low, anything above 141.62. Weekly higher low for the potential weekly trend continuation. So I do maintain, guys, that as we approach the lower 150 to a 140 level, it is such a juicy swing trade opportunity location for AMD. I don't believe this one will be lagging behind its peers for much longer at its current pace. And I do think there is very good value down here in AMD at about 150, 140. So I will continue to play this one aggressively in these levels. Moving on to Amazon right now. So Amazon dropping a little bit on the day too, 0.68%. But what is Amazon looking for, guys? Well, keep in mind, was a big daily downtrend right here. Huge engulfing move by the bulls. And now they're just looking to set up the daily higher low. Anything pretty much above 174 was looking for a daily higher low. Seems as though they want to find it around here, reacting nicely from the moving averages as well. And in the event we pull back a little bit lower here, guys, 180 down to about 175. Very nice swing trade opportunity for Amazon, in my humble opinion. Why? Well, because, guys, where are we having this sideways range of consolidation? We're consolidating above the previous resistance level of your prior all-time highs. The fact that we're consolidating above that, using this level as support, is a very bullish sign, especially since we're looking for that eventual continuation into the 200 level that it should be able to get over the course of this year. I'm still very, very bullish on Amazon, and any dips into the mid 175s, I will be playing aggressively. So all in all, Amazon looking fairly bullish right now. No red flags as a whole. Moving on to Google. So Google down about 1.3%. Give me a very quick second. And let's get on to it. So moving into Google, down about 1.3%, but sideways trading for Google now, pretty much for almost the past month at this point, right? What are we looking for? Break of either of these two directions. If we do get a breakdown here of 174.34, daily downtrend is commenced, and then we'll be looking to these levels right here, the weekly higher lows, 171.24, same level, to be acting as the last line of defense. If we lose that, it'll be weekly downtrend, and we'll be looking at a bit more monthly consolidation by Google. So far, none of that is happening. The flip side scenario is break of 182.16, get a nice daily uptrend in motion, and just continue this weekly uptrend march into new all-time highs, and maybe into the famous psychological level, guys, of the ever so elusive $200 price target for Google, right? So all in all, Google's not looking too bad. One thing I do have to say, guys, is in the event that the markets do correct a little bit more and bring big tech down with it, if for whatever its reason, I see 170 down to about 165 on Google, that is where I'm going to be a lot more tempted to play this stock, especially using short puts. So all in all, Google looking very good right now, but very tough for me to take a position up here. Moving on to Meta right now. So moving on to Meta, 1.41% of the downside. Meta's looking very good though, guys. Daily uptrend is the context right now. Looking for a higher low, anything above pretty much 454. Looking for that daily higher low for the trend continuation. Reacting nicely from the 12 EMA, but even if we pull back a little bit further here, guys, let's say we do pull back, 485, 482, could be a very juicy location, guys. Breakout of this current prior support, which is now resistance, right? We broke out of it, maybe looking to retest that for an eventual run. If we do get the retest of 482, guys, I will be playing it aggressively because that will also be looking for a weekly higher low. And what is over here on the weekly, guys? Well, you guys know it's that previous support line that we've been highlighting, but it's also the 12 EMA. When I see confluence between a big line of support and the weekly 12 EMA, especially a weekly 12 EMA that Meta has defended so nicely ever since the rally started, in pretty much almost a year and a half ago at this point, right? Other than this earnings mishap, it has always respected the 12 EMA. So this is where I'm going to be taking a trade location on Meta if we do revisit. All in all, bulls in full control, guys. Control the monthly, control of the weekly, gorgeous weekly uptrend, and control of the daily chart as well. Now, moving on to Microsoft next. So Microsoft, very good. Even if it's at 0.45% of the downside, guys, Microsoft is just looking so healthy, right? Daily downtrend was here. Huge engulfing move. This is one move, by the way, right? Very nice engulfing move by the bulls. So any pullback, guys, going to be looking for a daily higher low, anything above 405.16, daily higher low for the further trend continuation. Now, the previous all-time high, previous resistance level, which is now going to be acting as support, is not that far away right now, right? Only an additional 3.5%. So it could be very possible that Microsoft does a little bit of a retest and then run further. The weekly chart would support this as well. Gorgeous weekly chart to the upside, weekly uptrend, little bit of a retest down here into this, as we said, prior resistance level, now support, and the weekly 12 EMA should be curling up into this location too. So around the 430 mark could be a juicy location, a little bit of a swing trade on Microsoft. for that inevitable trend continuation, provided these markets just continue their march higher and the macro doesn't severely deteriorate, right? But all in all, guys, no red flags on Microsoft at all. Full control of the monthly, full control of the weekly, and full control of the daily as well. Now, moving on to Netflix. So Netflix also looking fairly good here today, right? Daily uptrend, very nicely underway right now. Huge tight range of consolidation. This, as a matter of fact, reminds me of what kind of Google is doing right now, right? Setting up pretty much kind of like a bull flag. It was more obvious on Netflix on the weekly. Bull flag, we talked about this in the 2 prior weeks, how it was looking very good, consolidating above the range of resistance, which is now support, consolidating above it, similar to what Amazon is doing right now on the monthly, right? Now, looking for that trend expansion, and we are getting the trend expansion. Where's the next resistance, guys? Where is it? 690 to 700 all-time highs. We are almost there right now. So in the event Netflix has a little bit of a pullback, anything above 637 right here, anything above that, going to be looking for a daily higher low for the eventual trend continuation. Looking very solid on Netflix. Nothing bad to say about the company at all. Full control, monthly control, weekly control, daily control as well. I would be tempted to take a little bit of a swing trade opportunity right around here if we do get the retest here, guys. Stop loss is very tight below our higher low, 636. So between this line, 654, 636, call it about $20 worth of risk. And the upside from about 650 to our all-time high 700 is about 50, right? So we're risking 20 to make about 45, 50. Good risk to reward, in my opinion. Now, moving on to NVIDIA. So NVIDIA continues marching higher, guys. But even NVIDIA, guys, it is getting a little bit overdone on NVIDIA right now, right? I love the company as much as the next person, but this move is starting to get a little bit overdone, right? About 42% from the earnings move. Huge move right now. That being said, on the technicals, guys, daily overbought. We're also weekly overbought, no stranger to NVIDIA though, and also monthly overbought, arguably the most monthly overbought that we've ever been. And usually when we've been this overbought on the monthly, at least in the past 2 years worth of rally, usually that has signaled a little bit of a signal for a pullback. Right now, no signs of that pullback. Beautiful daily uptrend happening on the chart. So any move lower, guys, going to be looking for a higher low, anything above 117.43. Higher low for further trend continuation. Could be a nice little tap and go location right here. Prior resistance, 12 EMA confluence with support. Could be just a little bit of a retest and run. However, in the event, guys, that this is actually the time for NVIDIA to cool down a little bit, daily downtrend, and go into some very healthy weekly consolidation, could just be looking for a weekly higher low, anything above 76, weekly higher low for further trend continuation. Where am I targeting, guys? I'll be probably targeting this location right here, somewhere around 117, 115. Seems to be like a very decent location for a weekly pullback, guys. And I know that would be a lot. It would be about 14% for NVIDIA, but sometimes the stock moves 4, 5, 6% in a single day, right? So it can get there. And if it does get there, guys, and maybe just consolidate sideways for a little bit, that would be a very good case scenario as well, right? Maybe just takes a little bit of a breather for about maybe, a couple weeks up to a month. That would be the best case scenario for NVIDIA, in my opinion, before they really start mounting up maybe further gains in the second half of 2024. Moving on to Tesla right now. So Tesla looking very decent, guys, trying to complete the breakout pattern. We need the break of 191.17 to really take us up into the next line of defense, which is going to be around the $200 mark. Now, where are we using as support, guys? Look at these two candles as of the most recent couple of days of trading. It is the top end of the range of resistance. Breakout, retesting this location, using the moving averages as support as well, and now maybe looking to run. So there could be a little bit of a swing trade opportunity on Tesla right now, guys. And that swing trade opportunity is as follows. Very tight stop loss. We are looking long here into $200 resistance, which is also pretty much your 200 daily moving average as well. So from here to the 200, we're looking at maybe, let's call it about $15 worth of reward, and we're risking pretty much the daily higher lows, which is about 177. So risking about $7 down, $15 up of profit, 2 to 1 risk to reward trade. Not that bad in my opinion. Why is the stop loss here? Because in the event we curl back down, we'll be losing the daily uptrend, and that invalidates our daily uptrend continuation scenario, right? So looking quite decent on Tesla, nothing bad to say. But even if we do give this up here, guys, they have built a very big base of support down here at around 172 down to about 168. So if we do come down there, we'll tackle that when we get to it. But all in all, Tesla looking pretty good right now, even on the weekly, guys. Very tight weekly consolidation. If we can get this weekly trend breakout into the 200 level, it's going to look very, very nice, guys, for maybe some continuation onto the next level, which would be around the 250 15, right? And keep in mind, deliveries do come out the 1st of July, so be very curious to see how Tesla did on its most recent quarter, considering the fact that they've been offering a lot of incentives. More specifically, they've been offering 1% financing for new vehicles throughout the past month and a half, and technically, well, not technically, it has been reported that that has been contributing to larger sales from Tesla. So looking quite decent, especially on the technicals as well for a little bit of a breakout. Now, moving on to Palantir. Palantir just an absolute monster right now, guys. Palantir looking so good, right? Very strong daily uptrend right now, looking very good. As soon as we see a little bit of a sign of a pullback, that could be an hourly trend change to the downside. As soon as we see that, going to be looking for a daily higher low, anything above 2286, looking for the daily higher low for the trend continuation. Now, a little bit of a fallback area, guys. Prior resistance, could be newfound support, and the 12 EMA on the daily will have time to curl up in this location as well. So it could be a little bit of a decent swing trade location. If we do pull back here, guys, I'll probably be writing short puts at the $23 level. That's how I'm going to maybe be looking to play this one on Palantir. But all in all, this daily breakout is gorgeous. Resistance levels currently put at about $27, $28 right now. Right on the weekly, looking very good. Gorgeous weekly uptrend in motion. So even if we do start pulling back in the event of broad market weakness, we have so much space on the weekly now, anything above 20.7, looking for the weekly higher low for the trend continuation. Moral of the story, guys, Palantir is now finally doing the monthly trend continuation that we've been waiting for and talking about for the past 2 months. So hopefully you guys are able to build up some share position over here, because I do think that in the next few months, guys, we are going to be tackling this $28, $29 level for the breakout pattern. Looking very good on Palantir. Now moving on to PayPal lastly. So PayPal continuing its slide to the downside, 1.68%, and still, unfortunately, guys, not daily oversold conditions just yet. So what are we looking for here, guys? First things first, we need to get the hourly trend change back. No hourly trend change since $68. Nothing but full bear control. Oversold on the hourly, oversold on the 4 hours as well. So we could maybe be expecting a little bit of relief, but we need to see that relief translate into a hourly uptrend formation, right? It serves us no purpose to try and pick the bottoms, guys. Wait for the hourly trend change, and then we take it here. We put the stops below the lows, tight stops, then we start targeting the prior lower highs, right? So that is the way that I trade these things rather than continuously trying to catch a falling knife. Need to wait for that trend change confirmation, because when we get that trend change confirmation, the daily bounce is underway. Now, a few problems with the daily bounce at this point, guys. When that daily bounce is underway, we have a lot of resistance above us. This whole green box that was support for a very long time, guys, 3-4 months, is now going to be resistance, right? And the moving averages, which are curling down right now, could be ending up there as well. So even though we may get a daily bounce, guys, it's going to have to be a very juicy one, because let's say we start this daily bounce from here. We need to at least get up to 50% to give the bulls the best chance at resetting the daily uptrend. If, for whatever reason, we only bounce 25, 30% and then run into this area of resistance right there, add the moving averages, most likely we're going to get rejected. Then it'll be up to the bulls to really start, prove to us that they can change this. But the probabilities would favor a retest of your lows at that point, guys. And in the event that does happen, you guys know what I've been looking for. I'm looking for short puts down here, 57 or 58 down to about $56. If this move continues into this location and we get daily oversold conditions, that's where I'm going to be doing a heavier position on PayPal, maybe 3-4 contracts, just trying to play the daily oversold conditions that we really haven't seen, guys, since last fall on the daily oversold. So hopefully that's educational for you guys. That's pretty much everything I had for you. Before we take a look at my portfolio, just want to remind you guys, even though the markets are on a holiday tomorrow, I will be preparing a video for you guys. I've been working on it for a while, and this is going to be titled, Is Big Tech Overvalued? We're going to be looking at the Mag 7 stocks, but my Mag 7. So we're going to be looking at Apple, Amazon, Google, Meta, Microsoft, Netflix, and NVIDIA. We're not going to be looking at Tesla. I'm replacing Tesla by Netflix, not because Netflix is a better company than Tesla or anything like that, right? Now, the only reason I'm doing it is because I want all the companies, big tech companies that are near or at or beyond the all-time highs, because usually that is when discussions about overvalued starts happening, right? It's the only reason that I'm going to substitute, Tesla for Netflix in tomorrow's video. And we're going to go through those 7 stocks and see if, even though they're at the all-time highs, are they still a good buying opportunity, or are they slightly overvalued? So now, guys, let's take a look at my portfolio to see the few trades that I made to wrap up the week. So taking a look at the portfolio here, guys, I did add a few positions today. So you will see those with the blue dots. Those are the new positions in the last 24 hours. We still do have a number of current open ones as well. AMD 150s, those aren't going anywhere. Amazon, we wrote the Amazon 180s for about 90 cents. Amazon's trading about 182 right now. So fairly close to our strike price, but it is within my range of support that I want to be picking this one up at. So looking fairly decent, got about 90 cents for those, 0.5% for that contract. We also wrote the CP 77.5s. Those are one of the plays that I was looking out for on the channel here, guys. We wrote the CP, so those expire pretty much on Friday, the 77.5. So very, very close to the strike price right now, but this one is not known to move a lot. It doesn't have a lot of implied volatility, so you really kind of need to be on top of the stock price. Not only that, this only trades in monthly contracts. So I was lucky enough for this week's expiry to be one of those monthly contract expiries. Looking to pick it up down here, guys. Looking very, very juicy. It's very close to my support range that I'm targeting down here, and I will dollar cost average into this position in the event we revisit the lower $70 range. But as a whole, I love this company. Such a strong management team, such strong fundamentals as well. So really not nervous about this position in the slightest. Now, we still have the Pepsi 165 calls open. We'll see if we get called away on Pepsi by Friday. We also have the Visa put credit spread open too, and that's pretty much everything we added today, right? The only other things that we added today, guys, I added one more contract of the CRM 240 calls, which are leap calls for next June 2025. We now have 2 leap call contracts because I do believe CRM might just be looking to go on a little bit of a run right here. And I'm willing to add one more contract in the event we revisit the lower $200 range. But I do believe in the longevity of this company, and I do believe they will be able to recapture this earnings mishap that happened pretty much a few weeks back. So I'm going a little bit heavier than expected on these, but still not that large of a position, guys. Only about $6,000 worth. Now, I know it can be a large position for a few individuals, right? But just in relation to the size of the exposure that I'm running right now, it's not that big, just about a 5-6% position on the total exposure. And that was pretty much everything that we did today, guys. There was a few closing trades that we made today as well that we really don't see here right now. And those are pretty much GameStop. So I did close GameStop today. I'll show you the closing trade right here. We closed GameStop 100 shares at 25.29, and we closed the covered calls that we had open on those right there. So you'll see right here, if we want to do some quick math, how much money I made on GameStop. A little bit of a tidbit. It is not that much at all, guys. So on GameStop, right, our average cost was $23.54 if we waited for the calls to expire fully. Now you can see that I bought the calls back for about 63 cents. So we have to add 63 cents on top of this break even. So 23.54 plus your 63 cents gives us a total of about 24.17, and I sold the shares for 25.29. So we literally made $110 after being in this one for about 2 weeks, but at least we didn't lose money because you guys remember where I bought this thing, right? I bought this thing pretty much at $38 all the way back here, right? Expecting a little bit maybe of momentum continuation, but we never got it. So it's just time for me to get out of this position. I was only in it for the momentum, and now that the momentum is no longer here, I don't want to extend my stay, even if eventually we get another rally down the line, guys. I was looking to play the immediate rally, and I was fortunate enough to be writing covered calls on the way down, which brought my average cost all the way down here, which just goes to show, guys, the power of covered calls sometimes on stocks with a lot of volatility. We also closed our little short that we had open, guys. Very, very quick trade, right? So we opened the short yesterday on MNQ right here at about 19,923 on the NASDAQ futures, and we closed it at about 19,881. So about 52 points. That was roughly $85, $87 in gains. Not the biggest amount of gains whatsoever. And I'll explain the logic because I do believe the logic is the one thing, guys, that we really need to focus on all the time, right? So NASDAQ on the morning, we were up very nicely on the morning, and then we had a little bit of an engulfing move coming back here. So when I saw this move happen on the NASDAQ, I had to see what was happening in relation to the S&P 500. Now, I closed the position pretty much. You can see the timestamp right here, 11:29, right? So 11:29 is pretty much right about here. When we started engulfing this most recent level of resistance, started breaking through it. And I looked at the SPY. What was the SPY doing at 11:30? Well, what was happening, guys, is fail of the low of the day twice and moving into the highs. You can see this is the 11:30 candle right here. SPY did not break down on the day today, just really did a great job of upholding the hourly uptrend this entire time and started moving higher. And that's when I thought it's probably my cue to get out because this market most likely wants to move higher. So that's why I closed the trade there. Other than that, guys, pretty much everything still is largely the same. Happy to say though, now at least we are back in profit on our Intuit position. We started buying this Intuit position, guys. I'll remind you, after the big earnings drop that they had a few weeks back, we actually bought our first amount of shares there, and then we got a couple more shares down here. So we're now above, and I do expect this one to really start rallying back into maybe the 630, 640 level. So looking like a very decent swing trade, only using shares, guys. So you don't always need to use options. This one took a little bit longer to come back around. I didn't get the best first entry. It was a good first entry, but then CRM disaster caused it to drop more. And that was really unexpected by everyone, right? But at least we were able to buy the dip here off of our good prior range of support. So that's pretty much everything in terms of today. Still no covered calls on Square, no covered calls on SoFi, just because the stock price is not close enough to our assigned strikes to be doing that. But I still am confident in those two positions, even though they've kind of been lagging behind the overall market. So this is how the portfolio is set up leading into the Thursday and Friday session. Hopefully that was educational for you guys. If it was, consider dropping a like on the video. Would really appreciate it. Consider also subscribing to the channel if you're new. I would love to have you here, guys. Thank you so much to all of you who take the time to subscribe. Really love every single minute of doing these videos. And as usual, guys, if you have any questions whatsoever, stocks, technical analysis, options play that you want to run by me, anything you want, guys, leave it down below in the comments and I'll usually get back to you within the first 24 hours. Tomorrow, as I said, I will be doing a video on if big tech is overvalued or not. So we're going to be taking a look at my Magnificent 7, which is basically the Magnificent 7, except for Tesla. I'm going to replace Tesla by NVIDIA, not because by Netflix, excuse me, not because Netflix is a better company than Tesla, just because I'm looking for big tech names that are in or around the all-time highs, because that is when questions about valuation concerns actually start coming forward, right? So that is what we're going to be looking at in tomorrow's video, a quick little valuation breakdown. And if I deem those to be overvalued, we're going to be looking at Amazon, Google, Meta, Microsoft, Netflix, NVIDIA, and pretty much Apple all the way up here, right? So those Magnificent 7 stocks. So hopefully that was a good video for you guys today. I will see you guys tomorrow pretty much in the evening slash, late afternoon when I put that video out. So take care. See you guys tomorrow and peace.